Privately issued currencies, they're as old as money itself, and they've actually always been around in capitalist economies. It's just that traditionally, usually in the analog world, historically, they've been very difficult to make large scale. You basically have to have a bunch of people that know and trust each other, and then they can agree on doing it. And then there's a whole load of logistical problems. You need sort of centralized counterparties, you need to organize clearing and so on. And I think what is easily forgotten in this mania and crash in crypto and the sort of diversion into this speculative mania is that those problems, have to some extent been solved actually by this technology.
Welcome back to Breakout from Breaking Views, brought to you by PGIM. I'm Peter Thal Larsen, the global editor of Breaking Views, and I'm joined in a sweltering London once again by Felix Martin. Felix, good to have you back.
Thank you, Peter. It's great to be here as ever. Yes, it's all very tropical here in London for once.
Which is sort of appropriate, or maybe the opposite of appropriate, because we are talking today about the crypto winter, which has been going on for some time. Obviously, the value of cryptocurrency has been falling, and there's been fraud and scandal and the collapse of FTX, the big cryptocurrency exchange. And then last week, what seemed to be the sort of fatal blow when the US Securities and Exchange Commission brought charges on consecutive days against two large cryptocurrency exchanges, Binance and Coinbase. So you would think crypto is dead, but you're saying actually crypto may be dead, but maybe long live crypto. Can you explain what's left for crypto to do or to be?
That is right, Peter. I'm sort of saying maybe don't throw the baby out with the bathwater. What's happened is the long-awaited and long-heralded regulatory crackdown on crypto has clearly arrived. As you said, major action from the SEC, putting crypto into the big freeze. I point out, of course, that actually the collapse in market value of all these crypto tokens has been going on for some time. And in retrospect, it's pretty obvious that actually these crypto securities, crypto tokens were just a sort of extreme example of speculative assets. And what has really hammered them has been not the SEC, as it were, but the Fed, the rising interest rates and, moving into positive real interest rates, this kind of thing. It's done for so many speculative assets. And really, that's what has killed off the speculative mania, if you like, in crypto tokens.
So, and obviously you have some great numbers. I mean, I think, what is it, that the value is of all crypto tokens combined is down by something like 2/3. Trading volumes are 10% of what they were at the peak.
Yeah.
So it feels pretty dead. And you would think that with that, maybe some of the grandiose claims that were made for some of these tokens, like Bitcoin and Ethereum and stuff, as the future of money, the alternative of money, that those would go away as well. But you think there might still be something to salvage there?
I think it's really important to distinguish between the original prospectus for crypto. If you go back to the Bitcoin white paper of 2008 and so on, which was as a peer-to-peer decentralized electronic money, that is to say, a means of moving economic value around through space and through time, privately issued and so on. Between that and what's really been in the headlines for the last few years, which is crypto as a speculative asset. And what I seek to do, first of all, is say, remember that the underlying drivers of all this interest in crypto are still there, and maybe they're stronger than ever.
And so tell us, what are those drivers?
So I think those drivers are, first of all, this whole story about the erosion of trust in traditional political institutions, something going on for a long time now. Second of all, there's the catastrophic loss of faith in the traditional financial sector. We know that dates back to 2008, never really recovered. And it hasn't had a great time recently because central banks, haven't been very good at foreseeing inflation on the one hand, and then we've had a whole load more bank bailouts on the other hand. And then the third sort of big secular trend is just the march of technology. We live in this world now where you can talk on voice over IP to Australia for free. People obviously wonder, why is it that we're still lumbered with bank branches and SWIFT charges when we're transferring money around? So these three big secular trends, they all converge. And at that point, the sort of ground zero of all of this is the sort of original thesis for crypto. And those are pretty powerful forces, so you can look through, as it were, the big speculative mania and then the killing of crypto as this sort of big casino and see that those things are still there.
Yeah, okay. I mean, I guess slightly flip point, but I guess I would say that if I was a user of the traditional banking system with a bank like SVB, I would still be better off than if I'd had my money, trusted my money with FTX. But anyway, leave that to one side. I mean, Felix, you literally, you wrote the book about money, and you have some quite good examples about how these sort of like the idea of these, or in fact, the reality of these privately issued currencies, they have been around in various forms at various times. So it's not a totally new idea, is it?
No, and I think that's also exactly as you say. It's very important because privately issued currencies, they're as old as money itself, and they've actually always been around in capitalist economies. It's just that traditionally, usually in the analog world, historically, they've been very difficult to make large scale. You basically have to have a bunch of people that know and trust each other. And then they can agree on doing it. And then there's a whole load of logistical problems. You need sort of centralized counterparties, you need to organize clearing and so on. And I think what is easily forgotten in this mania and crash in crypto and the sort of diversion into this speculative mania is that those problems, have to some extent been solved actually by this technology. There is something actually there in the technological advances. So, in that respect, investors shouldn't just totally give up on this space, I think. I think they should bear in mind that there have been technological advances made, that the underlying basic idea is actually a perfectly normal one historically, and that there could be some interesting stuff still to come.
Okay, just don't expect to actually make any money on investing in it. Maybe that's the
we definitely no recommendations on that front. I think it's no doubt a good thing that the speculative mania and the treatment of crypto as a speculative asset is over.
Okay, crypto is dead. Long live crypto. Felix, great as always to talk to you. Thank you very much, and we'll talk to you again soon.
Thank you, Peter.